The world's financial giants are sounding the alarm bells. JPMorgan Chase, a bellwether of global finance, has significantly increased its prediction for a U.S. recession. The bank's economists, led by Bruce Kasman, now see a 35% chance of a recession hitting within the next year. This represents a concerning jump from their previous estimate of 25%. The revised forecast underscores the growing anxiety surrounding the health of the American economy. It is a stark reminder that the path ahead remains fraught with uncertainty. The specter of recession is looming larger than ever. This shift in sentiment is driven by a confluence of factors, both domestic and international. The war in Ukraine, persistent inflation, and the lingering effects of the COVID-19 pandemic continue to cast a long shadow over the global economic outlook. These interconnected challenges have created a volatile and unpredictable landscape for businesses and investors alike. As uncertainty mounts, the question on everyone's mind is whether the US can avert a full-blown recession. JPMorgan's latest forecast paints a sobering picture of the economic road ahead. The bank's economists have raised the probability of a recession in the next 12 months to 35%. They predict a 45% chance of a recession in the second half of 2025. These figures highlight the speed at which the economic outlook is deteriorating. This shift is driven by factors weighing heavily on the US economy. Despite these worrying signs, the US economy continues to send mixed signals, making it difficult to get a clear read on its true health. While some indicators point to a potential recession, others suggest that the economy remains fundamentally sound. This dichotomy has left economists and investors alike grappling with uncertainty, unsure of what the future holds. The labor market, a key pillar of the US economy, continues to exhibit resilience. Unemployment remains near historic lows, and job openings remain plentiful. This suggests that businesses are still hiring, and that demand for labor remains strong. However, there are also signs that the labor market is beginning to cool. Wage growth, while still elevated, has moderated in recent months. This easing of labor market pressures is a positive development for the Federal Reserve in its fight against inflation. However, it also raises concerns about a potential slowdown in consumer spending as wage gains fail to keep pace with rising prices. The Fed's balancing act: inflation and interest rates. The Federal Reserve is battling inflation with aggressive interest rate hikes. This strategy risks slowing the economy too much, potentially triggering a recession. The Fed is walking a tightrope, balancing inflation control and economic stability. Recent moderation in the PCE index offers hope, but inflation remains high. The path ahead for interest rates remains uncertain. Section 5. Dimon's optimism. Can we achieve a soft landing? Despite the growing chorus of recession warnings, some prominent voices remain optimistic about the US economy's ability to weather the current storm. Jamie Dimon, CEO of JPMorgan Chase, has expressed confidence in the underlying strength of the American economy. Dimon believes that a soft landing, a scenario in which inflation is brought under control without triggering a recession, is still achievable. He points to the strong labor market, robust consumer spending, and healthy corporate balance sheets as evidence of the economy's resilience. Dimon's optimism is not unfounded. The US economy has repeatedly defied expectations in the past, demonstrating a remarkable ability to bounce back from adversity. However, the current economic climate is characterized by a unique confluence of challenges that make predictions difficult. The war in Ukraine, ongoing supply chain disruptions, and the lingering effects of the pandemic all inject a high degree of uncertainty into the economic outlook. While a soft landing is certainly possible, it is by no means a foregone conclusion. Section 6. Conclusion: navigating the path ahead. The US economy stands at a crossroads, facing complex challenges. JPMorgan's revised recession forecast highlights the risks ahead. The path forward is fraught with uncertainty. Economic forecasts are not guarantees. The economy is dynamic and evolving. Investors should approach with caution. Diversification remains crucial in mitigating risk. Stay informed and be prepared to adjust strategies. The coming months will be crucial for the US economy. The road ahead requires careful navigation and realism.